Okay. All right. So um, let us move on to Gordon growth model. Okay. Gordon. Now, using Gordon model, it is it G is R G is equals to R times R times B, where R is return required by equity holders or shareholders. Return required by equity holders. And how do we calculate it? We say R is equal to profit after tax divided by opening shareholders opening shareholders fund. Or we use this formula. We say profit after tax divided by average shareholders fund. It's 100. Or I can go to the next slide, right?
Yes, you can.
Or okay, or you just say, or you say profit after tax divided by shareholders fund. The first formula is preferred. It is preferred we use opening shareholders fund, or you can use the second one, but the second one will take time because you will need to be calculating average shareholders fund. And average shareholders fund is equal to opening shareholders fund plus closing shareholders fund divided by 2. That's the average. Now, the only time you can use a third formula is the way by the way they set the question, you will not be able to tell what is opening or what is closing. Then you can use the third formula. Like that question we solved, if you go back to November 2016, question 1 that we solved last time, you would notice that you will notice that the balance sheet extract they gave, you can't really tell whether it is for any year. But inside that balance sheet extract, you can tell what is shareholders fund from it. But they didn't put dates, they didn't put anything. So you can't tell whether it is at the beginning of the year or at the end of the year. So that's what I'm saying. So if you look into the question, you cannot tell whether the shareholders fund is at the beginning or at the end, you can use this third one. But if you are able to tell, oh, for example, they said, oh, the year end of the company was 31st December 2020. Okay, the balance sheet extract as at that date is this. They put everything there. So there is a with that one, you should be able to tell that's the closing shareholders fund. So with that, you should be able to tell opening shareholders fund with that. So now let us go to talk. That is R. So let us talk about B. Next slide. B.
Mm-hmm.
B is called retention rate. Retention rate. That is the rate of your retained earnings, the ratio of your retained earnings to profit after tax. And the formula is this: B is equal to retained earnings, retained earnings divided by profit after tax times 100. And retained earnings is profit after tax, or EPS minus dividend. EPS minus dividend per share, or profit after tax minus dividend. That's your retained earnings. So that is
Profit
B.
after
So once you
tax
are,
minus dividends. Is that what you said for
yeah,
dividends?
minus dividend, that gives us retained earnings. So once you are able to get R and B, you do, then your G is equals to R times B. So that is the growth rate. Now
Okay.
you may not see, the examiner may set a trap. All right. The moment you notice that there is a retained earnings, you may not see any sign of growth rate. But the moment you say that there is retained earnings for the year, there is growth rate. Once there is retained earnings,
Mm.
there must be profit after tax. So you should be able to calculate your B. Now, and there will
Okay.
always be equity, shareholders' equity. And so you already have profit after tax. You just need to do shareholders equity, profit after tax divided by shareholders equity. So what I'm trying to say is that to use Gordon model, the only thing you need to see is retained earnings and balance sheet extracts. So those are the only things you need to see to use Gordon model. But for average model, you have to see average method, you have to see series of dividend before you can use average method. Yeah. Are you with me?
I'm with you.
Good. Okay. Can we look at a question, or you are
Yeah.
tired?
Oh, no, we can. Now look at the question.
Yeah. What do you say?
We can look at the question before you trigger
Okay.
it.
Okay, we can. Okay, you still have strength to look at the question, Abi,
I
before
can
we
still go, or
manage.
do you want us to reconvene tomorrow?
Let's. That might tomorrow is going to be really tight. But okay, how about uh I would try to, can I do the video of the question tomorrow, then I will share it with you later, then you watch it later, and then if there is any question, you let me know on WhatsApp.
Okay.
Uh, or you don't, or you want to do, you are comfortable with live classes.
And then I'm going to with the live classes. I'm getting it more because my own is
Okay.
that if you do a video, I might not be able to ask you. You know, that sometimes when I'm like, why is
Immediately.
this?
Yeah.
That
I
yeah,
get, I get.
that is where I'm getting my understanding from. Because at that point in
Okay.
time,
No.
I'm confused.
Okay. Okay.
So
No,
if
no, no, no.
even though it's for like if you it's tomorrow, even though it's for like an hour, just for us to just
Okay.
solve this
No.
question, then we'll
Yeah.
do that.
Okay. All right. No problem.
Even though
Oh,
it's
no
for
problem.
an hour.
Yeah. Hopefully by, let's say, um 10 p.m. tomorrow, or 10:30 a.m. tomorrow.
That's
Yeah.
fine. That's fine. That's fine.
All right now. Yeah. Take care. and have a nice rest. Cheers. Bye.
I use. Thank you very much. Thank you. I appreciate it. Thank you.